Good evening. Welcome to the ShadowTrader Video Weekly for Sunday, August 17th, 2008. S&P Weekly in front of us. First thing I want to point out is notice that in the 5-week advance we've had thus far, 3 of the 5 weeks were dojis. And you can see doji is when you open and close the same area. And these a weekly doji generally indicates a market that's kind of tough to trade because you had big gyrations up and down and kind of finished flat, never really went anywhere. And that's exactly what we had this week. And this is all in the context here of a longer, well, it's the same thing, just different time frame, but of the trend that's been going on since mid-July. And as you can see, it's been difficult because you've had just very small breakouts here, and then constantly have retracements of like 90% of the move. What I've been doing as of late is keeping a close eye on financials and transports and energy stocks because that's pretty much the S&P in a nutshell, and I'd have to say the performance there has been lackluster. It's been somewhat disappointing. Even as the market has been going up, we shorted some Lehman this week in the model portfolio where we do the real-time trades via email, and it was here actually, and we made this piece here. We made about $2 on it, which is a lot really, on a teenager stock that turned out okay. And I'm pointing this out specifically just to indicate the weakness in financials that is just really just doing nothing really. I mean, these brokers here, notice the swing high here, right, which is 723. We have a lower swing high here and then yet another lower swing high, right? But look at the market, right? The market made higher swing high, right, and then parked itself Friday relatively close. So this is the way you kind of read relative weakness in a sector. The banks are almost the same. I'm not expecting much there either. Probably these are going to be the sectors to hit short when the S&P runs into resistance, which we'll get into in a second. Again, this one did touch the swing highs, but then since then it's just fallen, lost its uptrend and not been able to do anything. Transports are kind of messy. I would have expected transports to be stronger as the crude keeps dropping, but not really, and we're not getting any support really from energy stocks. The oils are here, and the OSX is here on the daily. Notice that both of these are about to make new swing lows. So that's something I've been watching, which I think makes this uptrend relatively precarious. Another thing that's been going on that I noticed specifically this week, I'll go back to the example of the XOI, is, for instance, that I thought the XOI was bottoming here, and it's apparent that it's not because, to me, one of the reasons is in the similar vein of, like you've heard me say in past videos, that you can really get the temperature and the pulse of the market the best when you just scan a couple thousand stocks over the weekend and see how many bullish patterns jump out at you. And when you're writing down tons of bullish patterns, the market's probably going, and when you're not, you're not. And along the same lines, when you're trading during the week and you start to see that a lot of plays that you're doing, if you're really bullish on a sector and then a leading stock in the sector just goes up a little and then falls back down, that kind of tells you that it's not ready. So like this week, for instance, CVX is a good example of that. We traded this long over the breakout here at the 85.50 area over this horizontal line. And, it really didn't go anywhere. I was expecting there was going to be rampant short covering here, because it would have been like the second time that the stock peaked, up over a bit, and nothing. It just, fell back down within 2 days, and we ended up making 50 cents or something on it. And, I really thought this thing was going to 90, and it just didn't do anything. So that's kind of that. This is bringing this up specifically, because it's just another thing that's kind of troublesome to the S&P, I think, because these energy names make up a good portion of it. So if the XOI and the OSX go lower, it's going to continue to act as a drag on the S&P, and we'll probably continue to see, at best, this sort of slow grind to the upside. This week, I also was keeping an eye on breakouts, and I did notice a couple of failures, which I think kind of adds to the iffy tone here. QLogic comes to mind, which, by all intents and purposes, really should have held. This has been steam that's been building here for a while, and Friday they just knocked the stock all the way back. Teledyne is another one that is a false breakout where we're trying to get up over this trend line. It was a move Friday, and nothing, just right back down to where the breakout point was. So usually when a market is ready, is really setting up to go, or it is already full-on rally underway, you'll usually see a lot of horizontal breakouts like this work. They'll usually hold. People will have interest in buying stocks and holding them, thinking that they're going to be able to sell them at a higher price later on. For all intents and purposes, but we're not really seeing that in this market. We just continue to see this kind of slow grind up, make a new swing high, fall back down, lose 90% of the range. So it's very tricky, really. It's really kind of a difficult thing to navigate on either side. Going forward, the main question I would say on everybody's lips is this really a bottom at this point that's going to hold for a long time, or is it just a bear flag in the context of this longer bear run? There's really no way of knowing that right now. Certainly, we do need to pay attention to the fact that we are coming up to this trend line resistance and this 200 MA here. Another thing I would be paying close attention to, which I will be, is the price of crude, and I wanted to point out this trend line here. Note that this is from 2007 August, so this is exactly a year ago, where this low was made here at about 70 a barrel, right? And then was the run to 140 plus, and look at the trend line here. So what do you think? Doesn't it kind of make sense that look at how much distance is left between oil and a strong support point, right? About 1 week's worth, right? And look at how much distance is left between the S&P and its downtrend line. So I wouldn't be surprised at all if we lurch forward a little bit longer and make it up to this little finish line here, and at the same time, wouldn't it be interesting if this touches down here to 107 a barrel? So this is something to keep in mind in the coming week. I think that these two things could tie themselves together, and then we could see the markets back off a bit, and then we would see crude at least and energy-related stocks maybe have somewhat of a rally, which I thought was pretty much coming this week, with the CVX XOI example, but it's apparent that, we're still going a little bit lower. So this is a relationship you should definitely keep an eye on. The dollar also, just to end on that, is not showing any signs of coming back into range. Notice this is the daily, this is the weekly. It's a very clear breakout now, so as long as this keeps running, you'll still see crude coming in a bit, and probably we'll get some sort of a blow-off top here, I would imagine. Not for good. The dollar could keep going, but would also make sense that this would be perfect timing, that these three things would happen at the same time, right? That you would get some sort of a blow-off rally in the dollar straight up, that crude would come down to 107, S&P would come to the trend line, right up into resistance, and then everything would turn a bit. So something to keep in mind. We continue to be bullish, but I would say very cautiously at this point. All right. On behalf of myself and the entire ShadowTrader team in beautiful Philadelphia, Pennsylvania, and of course, as always, from all the good people in Chicago, Illinois, at the one and only Think or Swim, I wish you good trading and good night.